What's going on, everybody? Shiraz Ahmed here with another video. Today we're going to be talking about what to do if you find yourself suddenly without your partner in life. This can be a hard topic to discuss, but it's important to know what to do if you find yourself in this situation and suddenly alone. So stay tuned. All right, welcome back. So today we're going to be talking about a really important topic, what to do if you suddenly become a widow or a widower. Now, typically I find that one person in the relationship is a bit more in tune with the finances or may actually handle them all together. Well, what happens if you find yourself without this special person in your life? Now, of course, the best thing that you can do is plan ahead and create a proper estate plan. Something where all the documents are stored somewhere and it's known to both parties, and you should know what is contained inside of these documents and what the other partner's wishes ultimately are. Now, if you have an accountant or a financial advisor that you're working with, your partner should know who they are and how to get in touch with them if something were to happen to you. Now, that's all well and good, but what happens if you didn't do that? What do you do when you're starting from scratch with no plan or knowledge whatsoever? Well, let's talk about that a bit further. Now, first off, I want to let you know that we're going to be discussing the Canadian-specific rules for processing of estates. I know that we have a lot of US and cross-border folks that watch our videos. If this video gets a lot of interest, or if you want, I'd be happy to make a US-centric version or a guide as well. But now that that's out of the way, let's talk about the more Canadian-specific concepts here. All right, the first thing that you want to do is start by collecting the necessary documents. Now, as much as possible, get majority of the information on any bank accounts, investment accounts, properties, legal agreements, any business or partnership interests that they may have. Basically, you'll want to uncover and collect all the information about all the financial and legal activity that your partner had. This is usually the hardest part of the process, especially if the deceased was the partner who was handling all these things themselves over the years. So you'll need to create and tabulate a list of all these accounts and items, and we'll discuss how to deal with the three most common of these in this video. Now, one of the most common assets that people have when they pass away is their primary residence. Now, if you're living with your spouse, whether it be legally married or a common law marriage, in this home you'll also have certain legal rights referred to as homestead rights. Now, typically we'll find that both spouses are on title of the property, and if one passes away, their ownership interest is actually taken over by the surviving spouse. Now, if that's not the case, it can get a little bit more complicated and you may need to seek out legal guidance from a qualified legal professional. If there is a mortgage, the survivor will also be responsible for making those payments, assuming that you are both jointly on title and on mortgage, which is typically the case. Now, your first step into resolving the property issue depends on whether there is a mortgage or a secured line of credit on the property, or if you end up owning it outright. If there is a mortgage or a secured line of credit, you'll want to visit the bank where this was done with an official form with the proof of death. They will generally make the amendments on both the mortgage and the line of credit and change the ownership details on file for you. If you own the property outright, you'll likely have to visit or get in contact with the land registry where you live and provide them with the proof of death, and they will then go through the process of transferring the property solely into your name. In some cases, there are also various investment accounts that are left over after a spouse passes. Some of these accounts can be rolled into the surviving spouse while maintaining their preferred tax treatment. These types of accounts include various types of RSPs, as well as a tax-free savings account. For this to happen, you'll need to make sure that your spouse is named as successor or annuitant on your beneficiary designation form for any accounts that you might hold that are of this type. If this has been done in advance, then the surviving spouse simply needs to provide the name and proof of death, and the accounts will ultimately roll into their ownership. So how to do that and what to do next are important questions that you're going to want to ask your financial advisor or financial professional at this point. You should want to come up with a plan that maximizes the benefits of these new to you accounts. Now, non-registered, also referred to commonly as cash accounts or brokerage accounts, are treated a bit differently. If the account was joint with rights of survivorship, then the surviving spouse will simply take over the account. If the account was owned solely by your spouse who had passed away, you'll need to follow the stipulations set out in their will ultimately to have the assets transferred. Now, the last thing that we'll talk about today is another common question that we get. What about the personal effects or other things that aren't bank or investment accounts or real estate? This is one reason why having a will is so important. In here, or in that will, they'll be able to make specific designations for items that they want people to have. Or ultimately, whatever your wishes may be, you can stipulate them there. If there is no will, generally everything will go to the next of kin, which typically starts with a spouse and or children. If there is a will, usually specific gifts are mentioned first, and then a statement like any remaining property or personal effects will be given to the surviving spouse. So let's quickly recap the first few steps. Number one, you want to collect as much information and documentation as you can. Number two is you want to get a list of the assets and business dealings. Number three, you want to go down the list and dealing with each item individually. Number four, you'll likely have to contact each company that they had dealings with. If they had an account with, let's say, RBC and TD, both banks, you'll have to visit both banks in person with the necessary documentation. If they had a property, you'll also want to contact the property registry where you live. And remember, if you find yourself overwhelmed, you can always hire a professional to help you out. Or do it all for you. Of course, there's typically a fee attached to this, so keep that in mind. Thank you for watching yet another video if you made it all the way to the end. If there are any other ideas or video topics you'd like to see covered, please feel free to reach out. I'll put my contact information at the end of this video. Thank you again for taking the time. Please remember, if you appreciate the content, then hit that like and subscribe button, as it really does help out the channel. Until next time, please stay safe out there, you guys. Bye for now.